What's up, guys? It's October 25th, 2024. What a great day in the markets, man. I didn't get to trade today because I went to work, but definitely super jealous of everyone who took that short right there. That's like a textbook high, a low two. Where are we on the daily? 45 minute. Daily chart, daily EMA is going flat. This blue line is that blue line. We had a rally and we sold right off. This rally tested the high of this bar, so that's October 21st. Body, the midpoint. Bulls wanted to get a continuation past this high right here and get a breakout, something like this, right? Because it was the first touch of the EMA after 10 bars with two gaps. There's the gaps. With that being said, bears don't have a gap here. We had a lot of selling, no doubt, but there's no gaps, so that means we're range bound. If there was to be a gap here, it would have stayed open. Bulls close the gap, and when gaps close, that means we're range bound. Yeah, so we rallied, sold off. Here's that rally on the 45 minute. Leg one, pull back, leg two, pull back, leg three, pull back, leg four. Oh, something interesting about this rally I just caught in the 45 minute. I'm gonna zoom in. Look at these bars. When we see a good breakout, we want size like in orderly fashion. We want the bars to be around the same size. So let's measure. This bar looks all right. I'm not looking at one to one. I'm just using this to measure. So that's 2 bars equals that. Yeah. Okay. Smaller. And then all of a sudden the bars get bigger and bigger. Almost to 1.5 R. And what am I trying to get at? That this was climactic price action. It was a vacuum test on a higher time frame. So let's see one. Maybe we go to a 4-hour chart. Just a vacuum test and it reversed. But we don't really look at 4-hour. But yeah, it's just a vacuum test on a higher time frame and it reversed. Bears got 3 legs lower. Leg 1, pull back leg 2, pull back leg 3. Looks like a little bull bar. See 1 to 1. 45-minute chart. Sell off. Pull back, you short the high of the bar, and you get your 1 to 1, and then we go sideways. Stop goes up there, which is great. That's actually a great trader's equation. Let me delete this. Look at that. The stop goes where it's supposed to be. That's a price action stop, and it's less than guys. When I have this 1 hour stop here, I'm not actually letting the price get to my 1 hour stop. Excuse me. I'm definitely trying to cut it as fast as possible. If I could take less than a 2-point loss on a losing trade, that's amazing. So here we are. You have the gap up. It's Halloween weekend. Kind of weird how next week is. So Halloween is on Thursday and November starts on Friday. So technically this is Halloween weekend, but just a weird way to have it. Next year is going to be fun because Halloween's going to be on Friday. That's going to be cool. So we have a gap up with continuation. 1 to 1 is met. If we pull it just right here, 1.5 R is met. I'm just measuring right now. Just if we just bought the open, it was met. Obviously, we're not gonna do that because we wait to get context for the day. 1, 2, 3, 4, 5. So the first 8 bars are just bull bars, and that looks kind of deceiving. You know, this kind of looks like we're gonna have a bull trend all day. Look how steep this EMA is. That's a bullish EMA with a lot of bull bars, 1 bear bar. The bull bars aren't necessarily the same size, but we are getting a breakout. And we know why. We just looked at the higher time frame, right? It was becoming climactic. And then bears get a 12, 13, 14, 15, 16. These bars start to grow. It starts off small and they kind of grow. 17 is a bounce. I think a lot of bulls bought this being the first trend line break. First trend line breaks goodbye. Typically. Well, if okay, hold on. If we're talking about first trend line break, that is the first trend line break, and bar 10 was a good buy for a scalp. It went 1 tick above the swing high on bar 7, so that's the minimum bulls need for leg 2, and they got the minimum. I think it's very easy to get trapped in this trade. I didn't trade today because I was at work, but I could definitely see myself buying this bar and then seeing this reversal and then trying to excuse me, buy more at the EMA. So I can so let's think about that. Bulls buy here and they plan to buy lower. That's how they want to manage the trade. They're gonna make a profit on their second entry and get out, break even on their first entry. But they don't get that. Instead, bears get their second leg. This leg was strong enough to get its own second leg. Keep in mind, there's a statistic Al Brooks likes to say is 50% of the time the market can raise to support or resistance in reverse. Looks like that was one of these times here. I think the morning was challenging, but around bar 39, I think it was a short. I think you should be getting short. We have that rally, we have a pullback, we have the trend line break, and then we have another trend line break here. Typically, I would look for that bounce, but we don't actually get any bull bars on the EMA, so that's also something to keep in mind. This is a high one, so first pullback, high one. High ones are typically better sells, so we're gonna have sellers sitting on top of here, and we do. We can see them get grabbed on bar 19. Sells off leg one, pullback. Leg two is nuts right here. Leg two ends up being a breakout below the EMA, and when we see bars 24, 25, 26, so I'm talking about these bars right here. I was watching this first action play out while I was at work. I wasn't trading it, but I was actually still thinking we're always in short. I saw 36. I was like, oh, that might be a good buy from a range bound perspective. We just go sideways for the day. But then look at 37. No follow through. 38 is follow through for 37. 39, bad close. It's just a tail above. Testing the high of bar 37. And then 40. I think 40 is a great trade. That's a great short. That is a like a screenshot. Save it for later. Low two. Why is it a low two? Low twos usually come at a worse price. So here's a low one, or you could say 38 is the low one. This is the low one. Pull back. Low two coming at a worse price. Low twos come at a worse price because there's more information. Why would a low two come at a better price? If a low two comes at a better price, you might be in a bull channel. I'm gonna find an example. Okay, here we go. This is kind of an mediocre. So 39, low one, pullback. 41 is a low two, and you will say, oh, okay, we have a sell off, we have a deep pullback, we're gonna go sideways, we're at the swing high, I'm gonna short this. Well, it's just a pullback for this bar right here, bar 40. This bar is a pullback for this bar, and ends up being a trap. Bears that get short here get trapped. They have to sell higher and get out at break even. Both low twos, context is different. I saw this and I was like, wow. I was like, my mouth started to salivate. If you're wondering how you could get short, well, what's the always in direction? Always in direction, 10 bars above the EMA. Pull back, but then we have 1, 2, 3, 4, 5, 6. Excuse me. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars below the EMA. If you're not comfortable shorting, you have to acknowledge that there's been an always in flip. We have more than 10 bars below the EMA, so we're either range bound or we're range bound. In this point in time, we're range bound. Looks like we're going to go range bound. Somewhat of a higher low, a little deceiving because we already seen the chart. 40 being a low two. I'd take that short, small pullback, short higher. I wouldn't short this bar right away. If you're going to short, I would short at least one average bar length lower. I do fix my trades. I have averaged in. I've saved myself and I have paid the price. I don't think people should be averaging in. I say that I might average in. I think averaging in is a tool. If you know how to swing that hammer, swing away. But if you're gonna average in here, by here, and by here, you've got to acknowledge at some point you're gonna hit out or you're gonna take a huge hit. So think about that. I prefer to just scale into winners, and that has paid me handsomely. So we get that low too, quick pullback, and then we start to sell 42, 43, 44. If you're still long, you got to get out. We got a bear micro channel. We got more than 10 bars below the EMA right here. And now we have a bear micro channel. You got to get out. You don't have to get short, but you got to get out longs. 45, if you see that, get out. We're breaking out of the low. Bears are going for a minimum. They're trying to close the gap. And they do that. Sells off. 46, 47, 48, 49, 50, 51. Huge bear channel. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have 10 bars without a pullback. You know, there's a sneaky pullback right here. So this could be a leg 1 pullback, leg 2. It's an implied pullback. It's rare we get. I think just last week I was talking about like a 6 bar micro channel for the bulls. It's rare we get more than 6 bars without a pullback. So if you're thinking FOMO, you know, I feel you. That's a hard thing to miss, is that sell off. But if you're quick with it, okay, 52, 53. 52 is a 3 bar micro channel on the 100-second chart with follow through. At this point in time, you just have to accept that the market has gone range bound. When we have our micro channel against another micro channel, we are now range bound. And what happened with 54? Leg 1, pullback. Wait, how did this go? Leg 1, pullback. Leg 2, second leg trap. We go sideways. Leg 1, pullback. Leg 2, pullback. Leg 3. You say that's 4 legs. Leg 1, pullback. Leg 2, pullback. Leg 3, pullback. Leg 4. That was sloppy. And then here's another play. That's the first EMA touch after 24 to 60. So someone's doing that math for me. What is 60 minus 24? I don't know. That is like 36 bars. 1, 2, 3, 4, 5. I'm not even gonna count that. Look at all the gaps. Okay, we have many bars on the EMA. This is the first touch. 67, 68 could sell. You can target the range lows, but then look at 70. It tested the high 57. It bounced and reversed. I think if you're still trading around this price action, you got to be asking yourself, if you're green and you're scaling in, so be it. But if you're red and you're gunning to end the day green, it might not be worth it. Take the day off. It's the weekend. Have a good time. So let's go for the 1-to-1s. Today had some good 1-to-1s. I was like, wow. But so yesterday we talked about expansion contraction, and we can see that here. You buy bar, you just buy bar 5 because that's the contraction, so that's a pullback, right? And you barely get your 1-to-1. You barely get it. You drop it a tick lower, you might get filled. When you see 3 bars, 12, 13, 14, get out. That's a 3 bar micro channel. Get out. You can buy again later, but you're gonna take profits or take a small loss. That's sometimes the best thing you do is just take a small loss. You know, that's something I have to accept. It's a hard thing to accept, but sometimes the best thing you can do is take a small loss. Because if you don't take your profits here, you don't get out here, you try and scale in, you're in for a bloodbath. And I think that happened to a lot of bulls today, which is what caused the sell-off. Leg 1, pullback. Leg 2, pullback. Leg 3, sideways. What's the market cycle? Breakout, channel, range. That was kind of sloppy. Breakout, we start channeling. Then we sell off again. The market cycle resets, breaking out through the EMA. Breakout, opposite bar equals channel. We get 2 legs lower, leg 1, pullback, leg 2. And we go range bound. Market cycle is always all over the place. It's always repeating on every time frame. Man, there was a mosquito in my room last night and it bit me the hell up. It is so, I'm trying not to scratch it, but like I feel like it's still in here. I don't know, maybe it's just watching. It's learning how to trade price action with us. Yeah, so let's go over the 1-on-1s and I'll draw in the gaps and then we'll say goodbye for the weekend. Okay, now 1-to-1's met. So I did it like that first. And okay, so I'm doing 1-to-1 on micro channels. Guys, if you're scalping, I just don't do it because I don't trade like that. But there's your 1-to-1. There's your 1.5. You know, you buy this bar. You buy the close here. You buy the first trend line break is always a bull flag. You get out for a small profit here. So I'm just not showing those, but just know there's way more trades than I'm showing. I'm just showing the type of trades I take or the type of trades I would like to take. You know, I don't know if I would take this, but I think I might take a small contract. I don't know. I can't say it because I didn't trade it live. And if I was to back test it, I still can't tell you because I just missed this day. Bear micro channel, I would not be looking for a one-to-one of this. Admittingly, I would be, when I see this, the first thing I'm doing is I'm looking for that first pullback, bar 9. I'm looking for where I can get long on the EMA. So it would look like something like this. But I would also hit out pretty quick when I saw this price action getting when the bears get continuation. So a lot of ways to play this. A lot of ways. You gotta find what works for you. So here's that one-to-one. Go to the tail. You can short the high of this if you're more bearish. And you get that. Look what happens when they get the 1-to-1, 1.5R. The market goes sideways. Bears are taking profits at the swing low. They know there's going to be buyers around here. It's a range bound play right now. This is a leg in a range. We don't know there's a trend, so you got to take profits at range lows. Then bar 1 or the gap closes range lows. When we see 27, 28, we think this is the range lows. So yeah, there's that 1-to-1 there. Make it smaller. Then we get some waterfall 1-to-1s. Here we go here, because that's an opposite bar. But where do we get short? Maybe we short here. And we're trading probability. So look, we had to sit through a pullback, but the probability was that we would go lower before we got higher. 1.5R was met before bulls can make 1R. That's bearish price action. But nonetheless, let's just stick to the concept of measuring from pullbacks, from the first bar in the channel to the first pullback. So 20, and then the first pullback is 27. So we're going to measure like this. Then we're going to see a leg 1, pull back, leg 2, leg 1, pull back, leg 2, pull back, leg 3. And we're in a range, so we count implied legs, leg 1, pull back, leg 2. Into the EMA, that's resistance. You can see it as a wedge. You can see it here as a wedge. So we get this leg, and then we measure it. We pull, we enter maybe on the high of 36, on the low of 37, low of 40. It's all met. You know, there's ways to play it. Entries don't matter. It's how you manage your trade is the most important thing. I personally probably would have taken this short. If I wasn't long, I would just take the first short and then scale it if I had to. There's another 1-to-1.5R is met. Let's make it smaller. Because there's another leg I want to measure. I want to measure from here to here for a big swing target. And I want to put it right here. Wow. Look at that. You get short right on the close. To the tick, you would get that first leg, right? Because now I'm looking at this as a leg. 33 breaks that trend line into the EMA. Short the, I think this would be the swing of the day. When you're going for extreme targets, don't be afraid to scalp out. That is the hardest thing I'm learning is sometimes I ask for too much, I hold for too long, and I go from green to red. So if you're going to go for these targets, just know the further the market goes, the less likely it is to go. So just don't be afraid to scalp out. Don't be greedy. I've been greedy in the past, and I've paid the price, and I want you guys to make money and not go through what I went through. Here, we have another breakout, 42. 47 implied leg, right? Because there's a bull tail. It is a bear bar, but it's a bull. But that's a bull bar. It's painted bearish, but that has bullish pressure. So here's that other leg. We put it here. 1-to-1 is met very nicely. So you can see why people took profits there. That big bar 52. Where is the risk? If bears are getting short, institutions have to take profits. They can't have this much open profits. They have to reduce the position. They get 1-to-1 of the breakout very quickly. It vacuums down 51, reverses hard, like 1, pull back like 2. So there's another trade, right? Look at this close. That's just shade bottom. So we know on the 100-second chart that is a 3-bar micro channel. We short the high of 55. It's just shy of 1.5R, but you do meet your 1R target. That's the minimum. Then now we're going to be patient again. Leg 1, pull back leg 2, pull back leg 3, wedge top. Leg 1, pull back leg 2, pull back leg 3. right there. Wedge top, short the EMA. It's a range play. Target is the range lows. Just drawing the gaps. Guys, these videos are naturally becoming longer because I'm talking about things I'm kind of interested in. These videos used to be 10 minutes. Let me know how you guys are feeling. I don't know how I can make these videos any shorter because now we're talking about trades and this is where the money's at. So bulls get gaps here. Oh yeah, I forgot we made it purple yesterday. Purple like the wine in my cup. Wink, wink. Cheers. Halloween, October. It's my favorite time of the year. I'm a fall guy. I'm not too much into summer. I like the cold. I like the heat, but I like to wear sweaters. So I can only wear sweaters in the cold. I like to wear my hood on all the time. Is there any gaps here? No. Let me know what you guys are into. What do you guys like? I want to know what type of trade you're taking. Do you guys like Halloween? Do you guys think I just ramble? Do you guys even make it to the... I always think like, does anyone even make it to the end of these videos? If anyone makes it to the end of this video, just be like, just type the letter E in the comments or something. I just want to know, does anyone ever watch? I never know. The YouTube thing says it's like most people watch for 4 minutes and leave. So I'm actually curious, like, how does that average work? There's no gaps here because we're range bound. So in trending environments, gaps stay open. In range bound environments, gaps get closed. These two gaps are the only gaps that stayed open, and then bulls were able to close the gaps and then went sideways for the day. It's about 20 minutes, guys. I hope you guys had a good one. I hope you guys capitalized on this trend and made enough money to buy everyone amazing Christmas gifts. If you learned something, share the show. If you didn't, you a hoe. No, I'm just joking. Share the show. Have a good one. I'll talk to you later. Thank you for your support. Thank you for the comments. I really do appreciate you guys, and I have a blast doing these. I'll talk to you guys later. Thank you. Bye.